Welcome back to the second in our series looking at the state of the whisky market in 2023. And in the first video, we looked at growth investors and value investors and how people's attitudes towards investing is shaping the market. Now, in this video, we're going to start to look at some of the other external forces that are having an impact on the market. Now, if you like whisky collecting and whisky investing, make sure you give this video a thumbs up and subscribe to the channel because we've got a load more videos in this series and we've got hundreds of other videos that you might like on the channel too. Now, as we all know, it's 2023 and the market and, well, the economy in the UK is basically down on its knees. It's in a mess. Now, I guess I'm not going to sort of get into any political sort of side of this, but I do think that it's nobody's fault. There are so many external forces happening. You've got the war in Ukraine, for instance, that's pushing up sort of fuel prices. And you've also got interest rates in the UK, which are at a record high. They're at 5%, the Bank of England base rate at the moment. And that's increased sharply, massively from where it's been for the last, well, I can't even remember how many years, just for a very, very long time, it's been almost 0%. So the rises of interest rates have been there to counteract the high inflation, which has been in double digits. So what? Well, these wider economic forces have an impact on the market. And there are three ways, and I think that these are affecting the market, from the downright obvious down to sort of some more slightly nuanced things that will be impacting the market. Well, the first thing that we've got to look at is that rise in the Bank of England base rate, because it is a lot more integrated into everybody's spending habits and everything than you may necessarily think, especially if you're watching this from overseas. Now, the Bank of England base rate is 5%. Most mortgages in the UK are around 6% now. So that rise, to put it into perspective, my mortgage was at about 1.25% or something like that, and we fixed it for 2 years, and it's up for renewal in about October, and the repayments are going to go up by about an average £500 a month. Now, the reason why the interest rates are going to have such a play on the market, I don't even think we've begun to see the squeeze on the market yet. It's because at the end of the pandemic in 2020, the Chancellor Rishi Sunak brought in an initiative to try and get the housing market back up and running. And he basically put a temporary cut in stamp duty, which is essentially a tax on property purchases. And there was zero stamp duty to pay on properties up to £500,000. So lots and lots of people moved house or remortgaged and took advantage of this sort of deal. And loads of people at the time fixed their mortgage rates for 2 years, exactly like I did. Now, that's interesting because all of those mortgages are currently up for renewal as of September onwards. So there's going to be loads of people, despite the squeeze on the market that we faced with the war in Ukraine and soaring gas prices and soaring bills and this, that and the other, and every bloody industry at the moment in this country is on strike because everybody wants more money. There's just so much happening. There's just so much happening there. And, there's a few obvious things here. There's going to be fewer buyers in the market because people have got less disposable income. So there's going to be less buyers for all of these bottles. And likewise, conversely, you've got more sellers. You've got people who are facing the squeeze, like another 500 quid a month people. It's a heck of a lot of money to find for your mortgage every month. So you've got a lot of people who are looking to capitalise their collections of bottles and sell them. So you've got more bottles coming to the market at a time when less people have got enough money to spend. And when you look at the volume of bottles that are coming to the market, it's not the very high priced sort of very collectible sort of value driven investment bottles. It seems to be large numbers of the very accessible bottles, say the sub 500 RRP bottles, which includes the folios and things like that. Now, the next thing that's really important to consider, and I think this is probably one of the most important things that we're going to have to consider in this video, is that why the hell would anybody come into whisky investing now? For a long time, as we saw, the interest rates in this country were near zero. So if you put your money in your bank, you would get almost zero back for it. If you put that money into a bond, and you can get fixed rate savings at the moment for around 6% or so, then why the hell wouldn't you? You can go and get a safe 6%, a guaranteed 6% by just literally having your money in your bank account, or you can try and earn 5, 10, 15, 20% in the whisky market, which is a lot more volatile. So why would you go into a super risky market? Because whiskey is not regulated, there's this, that and the other. why would you go into it when you can just put your money in the bank account and earn 6% on it, basically like just for doing nothing? And then this kind of brings us on to our final point, really, and that's to do with market psychology. Now, if you watch this channel regularly, you'll understand that we talk about the factors that prop up the values of bottles. So what is it that's pushing the price for a particular bottle to a certain price? Now, to almost every seasoned investor, this market crash or correction is not surprising. And in fact, it's been called for a long time by a lot of people. It's been too inflationary. Like many of the flipper bottles have simply been driven by the greater fool theory, like growth investors coming in, spotting a whiskey that's going up like this, and then jumping on the bandwagon and buying it. And then, that keeps it circling because you get more and more people coming in and taking these very high, sort of like low interest whiskey in terms of, from a whiskey perspective, they're often no age statement bottles. They're limited editions, sure, but they're in bloody thousands and thousands and thousands at a time. And there's nothing really clever about that sort of style of investing. It's just buying and following the market. But the problem is, a lot of the people that have been doing that are the ones that are potentially exiting those investments now, because if you're following the rise on the up, you're probably thinking, right, well, now's the time to sell because when's the market going to be bottoming out? There are people out there, myself included, that are using this time in the market as an amazing purchasing opportunity. There's some absolute bargains to be had at auction if you look for the right bottles. And I think the obvious thing here is if you can't figure out what's driving the rise in the value of a bottle, okay, so like, what do I mean by that? Why is bottle X increasing in value? So don't just think that because everybody likes it. Like, seriously, what is propping up that valuation? If you were to look at this in terms of properties, you'd think, okay, right, well, it's got a decent amount of bedrooms, it's got a very good area, okay, it could do with a bit of renovation, but it's not too bad, it's very good close to a school and things like that. So look at it like that with your bottles of whiskey. Like, what is driving up that no age statement new release from a brand new distillery other than people jumping on the hype behind it? Because it's not got a high age statement. It's from a very new distillery with very little pedigree. And you know what? There's nothing else to compare it to. They don't have that, especially a lot of these modern distilleries, they don't have the depth to their catalogue to really make those judgment calls. So this all in essence basically comes back down to that first video about growth and value investments. We've got to look at the market psychology, because I think a lot of people now will be not necessarily jumping out because of necessity in terms of the need to make more money to pay the mortgage, but because they're not seeing the whiskey market as being particularly exciting for them in terms of, right, I used to make a load of money and now I'm going to jump ship because I'm losing a load of money. And you can't blame those people. And it's just, and that's sort of like the wider thing with this market. I think the whiskey market in particular has become very saturated with people who are not necessarily very educated. And I mean this in the most pleasant way possible. People who aren't very educated about whiskey. And like, how can you be educated about whiskey? There's almost no books. We're the only channel on YouTube at the moment that is talking about whiskey as an investment. And a lot of the forums and Facebook groups and everything like that are mostly filled by people talking up their own bottles that they're buying, like the modern no age statement bottles. The true level of connoisseurship, the history of these bottles and all of that, it isn't there to find. So you can't blame people for jumping ship at the moment. But anyway, it's a really fascinating subject, and in the next video in this series we're going to take a look at game theory and sort of see how that comes into the whiskey market, because I think it really does in quite an interesting way.